Okay, good afternoon, ladies and gentlemen. Thank you for being here. First of all, I'd like to thank ST Property for inviting me to share with you about the commercial and industrial Singapore real estate market. This market segment has actually been quite a niche market before 2010, whereby it's only reserved for more savvy investors and for companies. Ever since a slew of property cooling measures has been launched by the government targeting at the residential market, we see that these two markets are receiving a lot of attention, especially early this year when after the 7th round of cooling measures was launched in January, more and more people are now looking into these segments as an alternative investment. So I'll be sharing with you quite a lot of statistics about how has been the market trends and our thoughts about where could be the potential growth areas in future. First up, I will share about strata titled commercial market. As I've mentioned, due to the property cooling measures, you can see that the transaction volume in 2013 and 2012 has actually spiked quite tremendously. This is also mainly due to a lot more new launches being placed in the market. However, ever since the TDSR measure has been launched in late June this year, because TDSR has an impact on all property loans, and the commercial market is also similarly affected. So you can see that the transaction has fallen by more than half, from close to 700 transactions in second quarter to only 300 over transactions last quarter. But just a word of caution, because such data available from Relis, which actually the subscription rate is very high. So if you subscribe to ST Property Watch, actually you're getting a bargain for your money, whereby they help you to compile the statistics for you. So for us corporate analysts, we have to subscribe from URA at a very high rate. The data that they update in the system is every week, and so the data can be quite different from week to week. So this third quarter data may not be a full reflection as of now as to what is the total transactions in the last quarter. So sometimes we have to constantly update the data in order to see how has the market been really trending. And out of the three main market segments in commercial, which are essentially office, shops, and shop houses, you can see that shops take up a big proportion of transactions. It's consistently at 56% for the past 2 quarters. Similarly, due to the fall in transaction volume, you can see that the transaction value has moderated to also more than half. And it is now lower than 1 billion in third quarter. You see that shop houses transaction value has fallen the most by 60%, and shops has the least decline in terms of total transaction value. Now, let us analyze how has been the strata title office property market. Okay, if you look at the graph on your left, which shows new sale and resale transaction volume and average prices, you can see that actually the price moderation is quite marginal as of now, whereby the new sale leasehold office price is about 3,600 per square foot, and for resale is about $2,000 over per square foot. So despite the steep drop in volume, prices are still holding up fairly well. For freehold offices, you can see that the new sale freehold office price is still maintaining at its level of about 3,400 per square foot. And resale freehold office is about close to 2,500 per square foot. So it is still resilient for now, but of course, looking at the next 1 to 2 quarters, it will be a better reflection on how prices have really been trending. How about strata shops? The graph on the left similarly shows leasehold tenures. You see there's a steep drop in new sale leasehold shop prices. That doesn't mean that the TDSR has an impact on strata titled shops. It is because of the nature of transactions that's happening in the last 2 quarters. In second quarter, the shop price was very high at 5,006 because of a contribution from one project, which is Midtown. Midtown was launched in second quarter, and it was fairly well received, and selling prices was like close to 5,600 per square foot. So that contributed to a high PSF price at that time. However, in third quarter, there were only 3 shop transactions, and they are in City Hub, which is in the Kallang area. So due to the nature of the different types of shops, because shops tends to be very different due to location and due to the size and what's not. So it is important for you to analyze carefully how should be the shop PSF prices. As for freehold, you can see that freehold shop prices are still going strongly. They are about more than $5,000 per square foot. Freehold tenure is still very valuable, so you can see that prices are still holding fairly well. As for resale, it is trending downwards, starting to trend downwards. Mainly also because of a lot of resale freehold shops are quite old, and that has a certain impact on the selling price. And then secondly, a lot of the freehold shops are evenly distributed in various parts of Singapore, so that has a certain bearing on the average PSF. Shop houses. Shop houses is also a very resilient segment, whereby due to its limited supply, prices have been going up very strongly for the past few years. On an average basis, you can see that prices are going beyond $5,000 already, as of almost close to $5,000 for the last quarter. And shop prices is about 3,000 odd, offices 2,002. This graph shows how has been the transaction volume for shop houses. As expected, mainly also due to the TDSR, the transaction volume has fallen more than half. And interestingly, when you look at prices on shop houses, it is important to note that it is price per land area and not price per strata area. So there's this important difference that you need to take note of when you consider this kind of property. And interestingly, you see that the leasehold selling price is higher than freehold. Why is that so? Because most of the leasehold shop houses are located in very good locations such as Singapore River Planning Area, Tanjong Pagar, and Chinatown. And for third quarter, there were a few transactions solely in Chinatown area. So given such a good location, that contributed to a higher per square foot price for leasehold shop house. But it is important to note that most of the shop house transactions are freehold. So you can see that a fairly big proportion of them are freehold tenures. How about the buyer's profile of such strata-titled commercial property? Interestingly, you will see that the bars in yellow marks the proportion from companies. The proportion from companies has been steadily increasing to 62% last quarter. There are more and more companies coming into the commercial market. The reason is very simple, because companies are affected by the ABSD in the residential segment. And so they are turning their attention onto non-residential markets such as commercial. And secondly, companies are not affected by the TDSR screening. So these two reasons could be how it has led to a higher proportion. And we also observed that from our agency feedback, more and more foreign investors are coming into Singapore, and they are very keen in the commercial market. So some of the foreign investors are starting to set up companies actually to look at commercial property. We also analyzed what could be the upcoming supply of commercial space. We are only looking at strata-titled commercial property to have a better sensing on how's the supply coming on stream. And when we study the size of properties that is exceeding 7,000 square meters and above, mixed commercial developments, we see that there are about close to 23,000 square meters of strata shop space coming to completion by 2019. That would translate to maybe about close to 500 shops. But if we add other mixed developments whereby it has a residential and commercial component, that could be another 1,000 shops. So all in all, you could see only about 1,500 shops coming into completion. And in our opinion, 1,500 new shops coming in is not a very high supply. In contrast, office shop space, this is office space is strata-titled units. It is about 5 times the size of shop upcoming supply. we further study what would be the average prices for the main planning areas in Singapore, you will notice that certain fringe and central areas will see higher prices on a PSF basis for freehold strata office spaces. And similarly for leasehold, it is also fairly high at close to 3,000 per square foot. So you can see that the huge disparity in PSF prices is largely also due to location, apart from tenures. How about shop prices? Orchard freehold units are currently at its highest price at close to 4,000 per square foot. And you will see that Bishan has a very interesting transaction at close to 5,000 per square foot. This unit is actually at Thomson Plaza, and the unit is actually very small. So you will see that the huge disparity in shop sizes will have a big influence on the per square foot price. So it is important for you to do that extra due diligence to make sure that the size and location is something that will affect the price point. How about shop houses? Shop houses in very centralized locations like downtown core, which is District 1 and 2, and Outram area, which is Chinatown area, you will see that the selling price is extremely high, exceeding 10,000 per square foot land area. So such shop houses are usually above 5 million in terms of price quantum, or even close to 10 million. So usually it is for very deep-pocketed investors who are able to partake in such shop houses. And we also observe that some foreign investors, such as from Hong Kong and from China, they really like our shop houses. So they are actually aiming for such locations. What would be the future growth area for the commercial segment? If you look at the future master plan of Singapore, our government is going to develop the Tanjong Pagar waterfront city. When the current port facility lease expires by 2027, this whole waterfront city will take its shape. And when this kind of waterfront city is being developed, which is about 1,000 hectares in size, it's a very huge size, there will be a spillover effect when it comes to demand for commercial space, whether within Tanjong Pagar area or at its peripheral. So which are the peripheral areas that will stand to benefit from this growth? It will be areas more towards the fringe west, that is Teluk Blangah, Pasir Panjang, West Coast, and even Bukit Merah. So good to look at these locations, because these locations will be able to benefit from this growth in the next decade. So what's our view for the commercial market in future? As our economic fundamentals are still fairly stable in Singapore, and with our business environment being very conducive for foreign investment, and also with the promotion of the tourism industry, we will see that there will be more and more visitors coming to Singapore, and that will help to boost the retail scene as well as the general business scene. So this will definitely translate to higher demand for office and shop space. And in light of the current cooling measures as well as the TDSR ruling, we will see that there will be continuing interest from foreign investors as well as company entities. And banks are currently quite hungry to offer mortgage loans for commercial property. So you would be likely to see some banks offering quite competitive interest rate packages for you. Even though the TDSR has an assessment that non-residential property loan is subjected to a 4.5% interest rate assessment, but still banks are able to offer a competitive interest rate in light of the current markets. And it's good to look at properties that are in future or current growth areas, because such areas are able to offer a potential higher catchment size to support your retail business. So these are areas that you are able to upsell to your next buyer when you want to sell in future, or you're able to offer that to prospective tenants. Our viewpoint is that amongst the three market segments, in the next half a year or so, shop house price is likely to be further supported, mainly due to its limited supply. So this is an area that you can look at. I will go to industrial market. The industrial market has actually been affected by a series of regulations imposed by the government, because the government is very concerned about the business costs that is incurred on industrial end users. So these are just a compilation of some of the main regulations imposed by the government, whereby firstly, they will not offer land sites with leasehold more than 30 years, and also they also restrict the minimum GFA size for industrial unit for certain land sites, and they also clamp down on Class B1 usage. And the most important property cooling measure that they have imposed on industrial property is the seller stamp duty, whereby you have to pay 15% if you sell your industrial property within 1 year. So how has all this slew of measures affect industrial market? This graph shows what is the total transaction volume of strata-titled factory units. As you can see, the transaction volume has hovered and it is now normalizing to pre-2012 levels. 2012, you see so many launches because everybody are rushing into industrial market, and also there's a lot of new launches back then last year. And resale proportion has fallen, and essentially resale industrial units form the major proportion of total transaction volume. When we look at total transaction volume by tenures, you will see that 60-year leasehold forms the biggest proportion, and it has also declined. And the next highest proportion is 30-year leasehold, followed by freehold and 99-year leasehold. How about prices? Factory prices has actually come down quite steeply, especially for 99-year leasehold and freehold. And now prices are a lot more comfortable at around 300 to 400 per square foot. This is actually a more comfortable price level as compared to the previous highs in the previous quarters. This graph shows resale prices, and for new sale prices, it is still fairly high for longer leases at above 600 per square foot. But new sale 30-year leasehold prices are still manageable at less than $300 per square foot. Interestingly, why many investors like industrial property is due to price quantum, because most of them are below 1 million. Because most of the PSF are below 500 per square foot, so the price quantum is a lot more manageable. And you will see that in third quarter, the resale composition of 1 million and below is about 63%, and for new sale transactions, 80% are less than 1 million. So this is a very comfortable price quantum for entry investors to look at. When we look at how is the buyer's profile for industrial property, similarly, companies contribute to a rising proportion. Now they form as high as 83% in the last quarter. Similarly, due to two main reasons as well, the ABSD is not imposed on companies when they invest in industrial property, and the TDSR also has no impact on companies as well when it comes to buying industrial. And also, with the rising rentals for the past 1 year, more industrial end users are looking at owning their own industrial space. So that leads to more companies buying industrial spaces. We further analyze what would be the prices on an average basis for different leaseholds by virtue of PSF in certain hotspot areas. You will see that the most city fringe and centralized locations such as Bukit Merah, Toa Payoh and Bishan has a higher per square foot regardless of tenures. And for transaction volume, Jurong West contribute to the highest transaction volume when it comes to short leases. For warehouse prices, warehouse is a niche area per se, because it forms only about 30% of total transaction volume out of the overall industrial transaction volume. Despite a drop in transaction volume for resale property, you still can see that it is fairly resilient. And for prices, freehold warehouse prices are still going fairly strongly at about 650 per square foot. So this goes to show that there's still certain form of a demand for warehouse spaces. Next, we look at what has been the overall take-up rate. That means the overall absorption rate for industrial space on an island-wide basis in Singapore. One important trend to note is that as of last year, the new take-up rate for industrial space has been falling, and is now falling below the 5-year average take-up rate. So this could be an early sign of industrial demand starting to moderate. It could be something that you need to take note of as well, so that you will not be overly bullish about the industrial property market. At a nationwide level, I think our government is quite concerned about whether our industrial and manufacturing health can continue in the long haul. So there could be some structural change in our makeup of our overall manufacturing sector. When we look at what could be the upcoming supply of industrial space, you will see that by 2014, there's a high influx of factory space. And out of this high influx of industrial space, next year, about 33% will come from warehouse. And the rest of the users also form a big chunk, such as multiple user space and single user factory space. And majority of the upcoming supply will come from the west area. So these are signs, macro signs that you and me should also be keeping track of, so that we will roughly have a gauge on how should be the demand horizon like in the next few years. So when it comes to growth areas for industrial market in future, there are two main areas that I see will have some potential. Firstly is the North region. The government has not too long ago announced their master planning goals. They want to develop the North Coast Innovation Corridor, whereby they want to develop high-tech related industries in the North area, stretching from Punggol, Seletar, Woodlands, and even at the peripheral of Sembawang. So with this growth in future, even though it takes about another 10 to 20 years to do so, but our development plans always go in phases. So such phases is already, it has really commenced. The government has really recently launched one site, a mixed development site in the Woodlands Central area. So they are already starting to develop this area. So related industries in the north would be attracted to situate in the north as well. And the second reason is that it is close to Iskandar, Malaysia. So due to its proximity, some industrial tenants will find it more convenient to be located in the north. The next region is actually Tuas. As our port lease expires by 2027 in Tanjong Pagar, and you will need to shift. So it will be shifted to Tuas. There will be a Tuas mega port coming up in the next decade or so. In fact, more and more industries are progressively moving into Tuas already, because as our shipping and port facilities consolidate in Tuas, the related industries will follow suit. So this is one area that you can look at when it comes to industrial property. And in order to accommodate the influx of a lot of industrial activity in Tuas, the government has really made plans to develop the location when it comes to transport accessibility. So they have already started to build roads to expand. And recently they have announced plans to build 4 more stations beyond Joo Koon into Tuas. So all these enhanced transport accessibility networks will help to make this space more usable for our industrialists. So my parting slide about what's the outlook for industrial. Now, as of the current market situation, we see that there's a price disparity between buyers and sellers, because sellers, rightfully, they want to sell at a high price to capitalize on capital appreciation. But buyers are also concerned about seller stamp duty and TDSR also for individual buyers. So both parties refuse to budge. So now there's a bit of an impasse. And this impasse might continue for at least 1 to 2 quarters. So we can see that the transaction volume might decline in the next 1 to 2 quarters or so. And the high upcoming supply of factory space by 2014 could present more options for you to invest actually, because with this upcoming supply, developers and also first-time buyers, they may feel a bit edgy and they may want to sell at a lower price. So it might be a good time for you to look at it also. And properties that are in current and future growth areas will see better resilience in rental use and capital appreciation. So such properties are normally more sought after, especially some properties right now in Tuas. And it is good to look at factory spaces with longer leases beyond 30 years, because going forward, the government is not going to release new land sites that are more than 30 years. So in future, longer lease whole units will be more valuable. And warehouse segment could be something that you would like to consider, because as our government wants to develop the warehouse industry, the logistics industry, there will be demand for warehouse spaces. But it is important to look for the right industrial property whereby the building specifications will sufficiently meet the needs of your future tenants. So it is important to look for agents or brokers who have a good knowledge about our industrial market, so that they can better advise you how this property can be valuable to prospective tenants. With that, I end my sharing. Thank you for your time, and feel free to ask more questions during our panel discussion. Thank you.